Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and you can see that we are just riding along. Let me tighten this up a little bit. Just riding along the middle band. We didn't challenge it yesterday. We didn't challenge the weekly pivot up at 2106. But one thing is for certain: the reaction off the jobs report is going to challenge one, if not both, of those numbers. Um, the same rule around here always applies. Do not game the jobs report. Don't walk in at 8:29 and say, well, reactions to jobs reports, those go up, so I'm going to buy. Because it only takes one time to be wrong, and you can do tremendous damage to your account. Because it's just in the nature of traders that you will ride being wrong in that situation to far more losses than you will if you were right. If you were right, you'll be like, hey, it hit. You'll end up taking it off, then it'll run, and you'll end up kicking yourself for the rest of the day that you didn't take enough profits. If it doesn't go your way, then you will spend probably the entire day, if not the week, if not the month, waiting for it to turn around so you can be right. That's not a good way to trade. That does very bad things to your account. So what do you do instead? Well, I can only offer to you what we do in the room, which is this. We wait for the number. We wait for the reaction. The reaction creates a range. And, we have tools to determine that range. An upper end of the range and a lower end of the range. Sometimes that range stays inside that range and creates decent fade trades on either side. Sometimes it breaks above the range, which has been a lot lately. Sometimes it breaks below the range. That's happened too. You find the range, you see how the range is reacting, then you have something to lean on. Higher lows, lower highs, whatever it is in that particular situation. That's a lot better way to trade the jobs report than walking in and saying, we're going up. Because honestly, you don't know. Nobody does. So, the two scenarios. If we head higher today, bulls have to get over weekly pivot. Then they have to deal with the 2112 area. Then they have to deal with the highs. If they're able to do that, then I have numbers up at 32.33, which is in the area of the upper band. Okay, maybe not today, but over the course of time. And what that would make this all on the daily chart would be a slow move back to middle band that's acted as support and a breakout and a breakout to new highs. Pretty plausible. It's happened a lot during the course of this uptrend. If today is the bear's day, then we need to break middle band. Middle band's coming in currently at 93.32, has to deal with the 85.25 low here from Wednesday, and then close below this 83 to 80 floor area. If it can do that, then that opens the door for a move to lower band down in the 55 area. So, everybody's, that's the map, and those are the key areas for each side as we head into the report. All right, everybody have a fantastic day. Follow us at Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. We would love to meet you. I'll be back Monday morning with another webcast. Have a great weekend. Trade them well, everybody.